All right, today we're going to dive into a crucial element in trading that so many people just completely overlook. And it's the one thing that could literally make or break your success. Nope, I'm not talking about price, I'm talking about time.
So let me ask you something. When you pull up your charts, what are you really looking at? If you're like most of us, your eyes are just glued to the price action, right? You're looking for patterns, for market structure. You're basically hunting for that perfect entry based on what the price is doing. But what if I told you that's only half the story? You see, price, that's just one dimension of the puzzle. The other, and I mean equally critical dimension, is time. And ignoring the market's internal clock, that's a massive, massive mistake. Price and time, they're not separate things. They're completely intertwined. And understanding that relationship, that's what gives you a real professional edge.
So is price alone enough? Let's talk about why you absolutely need to sync up to New York time. Look, if you're going to trade US markets, especially index futures, you have to play on their home turf, by their rules. And the number one rule? You operate on their clock. That means every single calculation, every bit of analysis, every trade you even think about placing, it all has to be anchored to one time zone and one time zone only: New York.
Now, if you're trading from somewhere like India, you might be thinking, oh man, that's a huge time difference. What a pain. But hold on, it's actually a massive advantage. Here's why. India's standard time is 5.5 hours ahead of UTC, right? New York is 4 hours behind. You do the math, and that puts you a full 9.5 hours ahead of the market. And what does that mean? It means the most active, most volatile US market hours line up perfectly with your evening, probably right after you get done with your day job. It's a fantastic setup. Okay, there is one little wrinkle you've got to keep an eye on to stay perfectly in sync, and that's daylight saving time. Twice a year, that time gap is going to shift by 1 hour. New York goes from UTC-4 to UTC-5. So that 9.5-hour difference we just talked about, it becomes 8.5 hours. Yeah, it's a small adjustment, but listen, when you're trading, precision is everything. You got to know this. All right, so we're all on New York time now, but what exactly does a trading day even mean? It's not as simple as you think, midnight to midnight. Nope. To really get the market's rhythm, you have to understand that every 24-hour cycle has two very distinct and very different opens. And this is a really crucial distinction, so pay attention here. On one hand, you've got what we call the true day open. This happens at midnight, 000 New York time. Think of this as the big master reset button for all the institutional trading algorithms. They're wiping the slate clean for the new day. But on the other hand, you have the daily candle open. This actually happens at 6 p.m. the day before. That's the moment the new daily candle literally starts to form on your charts. You need to know both of these to really understand the full story of what's happening each day. Okay, so with that foundation in place, let's map out the entire 24-hour cycle. Because a trading day isn't just one long, boring event. It's actually broken up into these very distinct sessions. And what do the pros call them? They call them kill zones. And that's because these are specific, predictable windows of time where volatility and opportunity just absolutely spike. So here's what that 24-hour rhythm looks like. And remember, this is all in New York time. The whole thing kicks off at 8 p.m. with the Asian session. Then things start to heat up when London comes online at 2 a.m. But the main event, the one we're really focused on, that starts at 8:30 in the morning with the New York AM session. And then that's followed by the PM session later on.
So let's break down these three major kill zones. First up, you have the Asian session, kicking off at 8 p.m. This one usually just sets the stage, kind of establishes the initial range for the day. Then you get the London kill zone, from 2 a.m. to 5 a.m. This is where you get the first real shot of volatility. But the New York kill zone, starting at 8:30 a.m., that's the main event. That's where the biggest volume, the biggest moves happen. That's our playground.
Okay, so let's zoom in on the most important one, New York, the main kill zone. This is where the real action happens. We're going to really dissect this session because this is where you'll find the highest probability setups day in and day out. All right, take a look at this breakdown. The New York AM session itself runs from 8:30 a.m. to 11 a.m., but look closer. Tucked right inside that window is the single most important hour of the entire trading day, the equity open, from 9:30 to 10:30 a.m. After that, you get the lunch lull, and then things pick back up for the PM session from 1:30 to 4. I really want to emphasize this point, that 1 hour from 9:30 to 10:30 a.m. will be incredibly volatile. And this isn't just my opinion, this is a core insight. So why is it so explosive? It's simple. At 9:30 a.m. sharp, the U.S. stock exchanges officially open for business. The floodgates open, and a literal tidal wave of volume and liquidity just smashes into the market. That's what creates those powerful, clean, directional moves we're all looking for.
And that right there is exactly why the AM session, specifically that 8:30 to 11 a.m. window, is our primary hunting ground. Sure, you can trade the PM session, people do, but the volatility, the clarity, the best opportunities, they are consistently, without a doubt, found in the morning. This is where you need to focus 100% of your energy. Okay, so this is all great theory, right? But how do you actually apply this stuff today? Let's get practical. Let's build your trading timetable so you can put this knowledge to work immediately. First off, you don't need to be a math genius constantly converting time zones. Here's a simple hack, a little cheat code for when it's standard time. Just take your current time in India, add 2.5 hours, and then flip AM to PM or PM to AM. So, for example, if it's 6 p.m. in India, you add 2.5 hours, that's 8:30. You flip PM to AM, and boom, it's 8:30 a.m. in New York. Simple as that.
And what about during daylight saving? The hack just adjusts a little bit. Instead of adding 2.5 hours, you only need to add 1.5 hours to your time in India before you do the AM/PM flip. That's it. Those two simple rules are all you'll ever need to stay perfectly synced with the market all year long. No more guessing.
Now, I want to share a quote, and it might sound a little harsh, but it's important. It says, if you cannot memorize these 4 or 5 timings, trading is not for you. And really, think about it. We're only talking about a handful of key times: the Asian session, London Open, New York AM session, and that critical equity open. If you're not willing to just commit these few times to memory, you're really not treating this like a serious profession. So here's your action plan. 3 simple steps you can take today. Step 1. Just eliminate all the confusion. Put a clock on your computer, on your phone, whatever, and set it permanently to New York time. Step 2. Memorize those kill zone times. Burn them into your brain. And step 3, this is the most important one, structure your entire trading day so that you are laser focused and ready to go specifically during that high probability window, 8:30 a.m. to 11 a.m. New York time. So if there's one thing you take away from all this, let it be this. It's time to evolve. You have to stop being a one-dimensional trader who only looks at price. You need to become a two-dimensional trader who understands the powerful combination of price and time. That is the key. That's how you unlock your edge. Look, this isn't just about learning a few time zones. This is about fundamentally changing how you see the market. It's about getting in sync with its internal rhythm instead of constantly fighting against the current. The market's clock is always ticking, whether you pay attention to it or not. So the real question is, are you ready to start listening?